Hey guys, welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. Wow, what a difference from what we usually see. It's been red, red, red. April being the worst month in the NASDAQ since October of 2008, in the middle of the Great Recession. But today, Federal Reserve Chairman Jerome Powell spoke and it calmed the markets. Look at that huge rally we had after 2:30 p.m. on the NASDAQ, same idea, and with the Dow Jones. But don't get it confused, it was really volatile even before that, going up, down, all around before finally making that big move higher. And volatility, remember, works in both ways, on the downside and the upside. And let's say we actually are in a recession. Actually, here's October 2008. During the Great Recession, the S&P 500 bounced by 9 to 19% 6 times between September and December 2008. So in a 4-month span, there's a lot of volatility. If we're in a recession right now, we wouldn't even know it until after the fact, but we could have these rip rallies that just eventually get sold off and we make lower lows until eventually that true bottom hits. But again, no one can ever predict that. It's wherever big money comes and goes. And take a look at this. What happens after the first rate hikes? Stocks do well. So after 3 months after the first rate hike, so the first one was in March, you're positive 50% of the time. Right now, we're definitely negative. Even though at first, after that first rate hike, we did go up 10% in a very short amount of time, only a few weeks. Since then, giving back all those gains, making new 52-week lows. However, over the next 6 months, future returns a median of 6.5%, positive 75% of the time. And over the next 12 months, an average return of 10.8%, a median of 5.6%, positive 100% of the time. Again, these are just statistics. Take them for what they are. I was looking at a ton of statistics on this channel about April being a super bullish month, and what happened? The stock market fell off a cliff for the worst month since October of 2008. So regardless of what's happened in the past or whatever indicator you're looking at, don't look at it as absolutes. Always remain fallible and always assume that you can be wrong, and very, very wrong, in fact. This can all be found on my Instagram, Unlimited Options Investing, which you can find conveniently below in the description, as well as my TikTok and my Twitter. As well, if you're new to the channel, welcome aboard. Hit that subscribe button. As always, smash that like button. Alright, so former Goldman Sachs president Gary Cohn told CNBC he thinks Fed Chair Jerome Powell drove it right down the middle of the road, giving the market the policy transparency it wanted. And I also got that feeling today as well as an investor. He was very calming, very confident, transparent, answering questions, came off as genuine. And they were difficult questions, but he just took them right on. For example, asking about future meetings and how they're not actively discussing 75 basis point increases for the time being. That also really calming down the market today. So stocks rallied broadly after Powell comments, financials and tech jump. But again, today it was super volatile. We were negative for quite a while, then positive, and then really volatile before he started speaking, went down and then shot right up. And don't get it twisted, if the market didn't like what he said and he came off hawkish, we could have gone down 3% just as easily. U.S. stocks rallied across the board Wednesday after Fed Chair Powell in the press conference ruled out larger rate hikes and emphasized the possibility of a soft landing, tamping down inflation without inducing a recession. All 11 S&P 500 sectors were positive on the day in the last hour of trading. And we definitely saw that neon green across the board. Stocks leveraged to an improving economy were among the biggest winners. Energy was the top performing sector. Financial names were also a leading group, with names like Bank of America and Wells Fargo jumping roughly 4%. The moves came as the benchmark 10-year Treasury yield dipped, Apple rose more than 3%, and Meta Platforms gained roughly 5%. Still, Powell underscored that while the FOMC remains data dependent for each meeting, the market can expect 50 basis point hikes at the next 2 meetings. He made it clear that corralling inflationary pressures is crucial, Crosby added. And really, the reason also why the market is trending, other than big money just doing whatever they want, creating whichever narrative, the idea is that now the market has certainty. And really the big day comes next week when the CPI comes out, May 11th at 8:30 a.m. It's going to be huge. All investor eyes are going to be on that data release. Another thing Jerome Powell also said is that right now the labor market is super hot. Employers are looking for workers. Right now there's 1.9 openings for every person that's unemployed. He also referenced corporate America never being better prepared for less than ideal macroeconomic situations like we're currently seeing right now. He also emphasized Fed policy works on demand, not supply, and that makes sense. When they start tightening, demand for growth will actually start to come down. And that makes sense. When they begin to tighten, that will slow economic growth, less demand will occur, but again, they can't control the supply side of things right now. The Fed also highlighted the war in Ukraine and COVID case surges in China as two geopolitical issues that could further exacerbate global supply chain disruptions. Something else the market really liked, Powell sees good chance of a soft landing for economy, saying the central bank has a good chance of achieving a soft landing for the US economy as it hikes rates to combat rising inflation. I would say that I think we have a good chance to have a soft or soft-ish landing or outcome, if you will, Powell said. While maintaining a soft landing will be a challenge, Powell pointed to the resilient labor market, noting that households and businesses remain in strong financial shape. It doesn't seem to be anywhere close to a downturn, Powell said. Therefore, the economy is strong and well positioned to handle tighter monetary policy. And remember, again, interest rates are still relatively low in the longer term. It's a short term right now. Things have been rising really quickly and it's been very painful. So how did the market like this? Firstly, the dollar index, which and really in an uptrend since the summer of 2021. So look at that rip up since the summer of 2021. And for the last week, we've been at a resistance that we hit back in 2020, right before the pandemic. And zooming out, a similar area that we hit resistance in 2017. We look at the VIX falling today, sitting right on that 50 EMA. Looking at the 2-year yield on the 4-hour time frame, we fell right from 2.8% all the way to 2.65%. And the 10-year again finding resistance at 3%, falling to about 2.9%. If you zoom out and take a look at the monthly, back at the end of 2018, January 2019, even back in 2014, the next key area being 3.74%. And after ripping higher the past couple of months, and especially over the past couple of years, are we now going to find some kind of resistance here? Looking at the SPY on the daily, you see a break of the trend ever since the beginning of April, that worst month in the last, 14 years? We're now conveniently right at that 20 EMA again on the daily, so we're at resistance. Let's see if there's some kind of follow through, and if we are to pull back, where are the buyers going to step up? You look at the Nasdaq, this one actually sitting right on resistance on that trend line, very close to that 20 EMA, so we have to see, is this move for real? We're nowhere near in the clear just yet, but definitely a very encouraging first sign. Bitcoin also rallying from just below 38,000 to now just below 40,000, and same with Ethereum from 2,800 to 2,900. Alright, and that's the end of my video. Thank you very much for watching. As always, let me know in the comments below what are your thoughts on what Fed Chairman Jerome Powell addressed. He saved the market for the time being. Let's see how it all plays out. Again, we're not quite in the clear, so again, let's see what happens. Remember to hit that like button, subscribe to the channel if you're new, and check out my description for my Instagram, my Twitter, and my TikTok. I will see you guys in the next video. Thank you very much.